Welcome to the NWR Mining Resources Series. I'm joined by Perseus Mining. Perseus is a West African gold producer, developer, and explorer with a market cap of $1.7 billion. The company currently operates 3 gold mines and produced more than 325,000 ounces of gold in financial year 2021. Presenting today, we have Jeff Quartermaine, who is the Managing Director and CEO. If you'd like to ask a question, please enter it into the Q&A panel within Zoom. Over to you, Jeff.
Thank you very much, and welcome to this presentation from the new home of AFL Grand Finals in Perth. This morning, what I'd like to do is to just briefly give you an overview of who we are, Perseus. I know many of you would be aware of us, but let me take you through who we are, our recent operating performance, have a bit of a conversation around the assets that we currently have, and as time permits, to talk about what we're doing in the ESG space, which has become increasingly important in recent times. So who are we? Well, Perseus has been around for a while, but we started off as a junior explorer. In the last few years, we've really started to hit our straps, and we now have 3 operating mines located in West Africa, in Ghana and Côte d'Ivoire. So we have exposure to multiple jurisdictions, which is very, very helpful. We've pushed on with our production now, and we're on track to be producing 500,000 ounces of gold in this current financial year. We've developed our balance sheet along the way, got ourselves into a fairly strong position. We have a strong social license to operate in the countries where we're involved, and we're moving forward very strongly as a corporation. As mentioned in the introduction, the market capitalisation currently runs at around $1.7 billion Australian. We are largely institutional held, so about 80% of our stock is held by institutions. And as you can see from this list on the right-hand side, it's pretty much a blue chip list of institutions, a who's who of key gold investors around the world. When I say around the world, we have about 40% of our stocks held in the United States, about 25% in Europe, and about 25% in Australia. So we're listed on the Australian Stock Exchange and the Toronto Stock Exchange, although I must say that the vast majority of our stock trades in Australia on a daily basis, and I think we average about 4 or 5 million shares a day being moved. So in the context of our Australian peers, this is where we sit in terms of reserves and resources. So you can see we're about, in terms of the Australian gold producers, the one that's not on the list here, of course, is Newcrest, which is right off the dial, but from Northern Star down to Alkane, we sit around the middle of the field. And what I'm going to be telling you shortly are our plans to move ourselves very strongly to the left here in terms of increasing our reserve base as we go forward. Now, what that means in terms of valuation is that we're also about in the middle of the field in terms of enterprise value per reserve ounce. So if we do increase our reserve base, as I'm saying, then to hold our position, our share price must go up. And therefore, what I'm saying is that there's a reasonable opportunity here for price appreciation over time, reflected not only by our value per reserve ounce, but the same thing applies in terms of our value of ounce of production. Our production is going to increase over time, and that will push us naturally to the right-hand side unless the stock price goes up. And I believe that given the quality of the asset-based management, et cetera, our license to operate, we will see an opportunity for a re-rate. But let's just have a look at the performance in recent times and see why I'm confident in where we're going into the future. So if we look at the last financial year, for instance, we had record production in both the June quarter, the June half year, and the full year. Very strong growth in before and after tax earnings, leading to the declaration of a maiden dividend. Actually, it's a capital return, but our first return of cash to shareholders will take place this year. We generated something like $190 million US of notional cash flow and finished the end of the year with about $156 million US of cash on our balance sheet, which is quite relevant in the fact that over the last 4 years, we've spent around 400 million US, or about 500 odd million Aussie, investing in 2 mines, and we've still ended up with cash on the balance sheet. And what we've done through that construction phase is put ourselves well and truly on the track to be a 500,000 ounce producer of gold. As was mentioned in the introduction, we produced around the 328,000 ounces last year at an all-in site cost of about $1,000 an ounce. selling it at $1,600 gave us a margin of around $600 an ounce. And so that was what drove the cash flow that we've generated. Now, as I say, we're on track for production growth, and the future from this point of view looks extremely good. Our production is based on pretty consistent performance now over quite a long period of time. The black bars relate to our Edikan mine, the yellow to our Sissingué, and you can see more recently what's impacted with the third mine coming on stream, Yaouré. Now we're at the 27th, 28th of September. We're pretty close to the end of the quarter, so I can't talk in any detail around our quarterly performance other than to say that strong upward trend that you can see from the last 3 quarters will continue when we report our September quarter around the middle of the month of October. In terms of what we're looking to be doing over the next 6 months, this is the guidance that we've given to the market. Now you can see we produced 191,000 ounces in the June half year. In the December half year, we believe we can take that up to 225 to 255,000 ounces at around the $1,000 an ounce mark, US dollar mark. Now the biggest contributor is obviously Yaouré, which is really going along very, very nicely, and I'll talk about that in a moment. But obviously, as well as that, with both Sissingué and Edikan are making their contribution as well. Financially, the last financial year was very good, as earlier indicated. So revenue was up around 15% to nearly 680 million Aussie dollars, nearly 140 million dollars in profit, in after-tax profit, which was 48% up on the previous year. And as you can see, cash flow and NTA, all of them were very strong and gave rise to, as I said, the implementation of a dividend policy. Now, what we're aiming to do going forward is at the very least to sustain a 1% annual yield. Now, in the event that we generate more cash than is required for this 1% yield or investment in future growth, we will be in a position to return that back to shareholders, either through special dividends or share buybacks. But for the time being, what we've set our target on is a 1% annual yield, and we'll be coming to our shareholders very shortly, seeking approval to make that payment, the first of those payments, following the AGM in November. The strong financial performance is based on steady growth over a long period of time, and as I've already mentioned, our balance sheet is particularly strong, and that's giving us a terrific platform from which to grow our company. Now, speaking of the assets that have delivered this, we do have the 3 mines, as I mentioned. We've got Edikan in Ghana, and Yaouré and Sissingué in Côte d'Ivoire. All of those are travelling quite well, as I said. Now, if we look at Sissingué, that was the second of our mines is Sissingué. It's punching well and truly above its weight. It was a small mine, but it's generated an awful lot of cash over a period of time. And what we're about to do is to come out with an updated life of mine plan in October that we believe should be able to extend the life of that operation out to fiscal 2026. Given that we repaid all our investment last year, or where this is all cash to the sideboard right now. The other mine in Côte d'Ivoire that's doing particularly well is Yaouré. Now, this is our newest mine. This came on stream in December last year. It was almost, a faultless construction period, which was something, to be proud of, given that it was during the COVID period. It finished ahead of schedule. It finished under budget, and commissioning since then was very, very rapid. We got to the end of March, and we're into commercial production. And I'm very pleased to say that since then the ramp up has been very strong. We have had a few mechanical issues in the last 3 months. But nevertheless, we've been able to work around those things and move forward. It's been quite interesting in the sense that we've had a number of gearbox failures, and one wonders seriously what the cause of this is, whether it was something to do with the quality of manufacturing during COVID or transport arrangements. We're not quite sure, but nevertheless, we've had to replace those, and things are tracking along extremely well. And just looking at the day-to-day data as it's coming through, I mean, Perseus has never in its life produced as much gold as it's doing at the present time. Actually, the third mine, and I'm not quite sure what happened to the slide for the third mine, is Edikan, which was our first mine in Ghana. Edikan is going along doing what Edikan does. It's a large-scale, low-grade operation. We have actually got a terrific opportunity there for extension of the life, and I'll talk about that in just a moment. But so we've got 3 operating mines. They're all running extremely well and producing, we believe, in this financial year, something around the order of 500,000 ounces of gold at an all-in site cost of around $1,000 an ounce. So that's great for the moment, but we're looking to the future. We believe that the best opportunity for us is to grow our business through organic growth or exploration. Now, this is something that we've taken very, very seriously, and we've made a major commitment to pursuing this in this particular financial year. I guess if we look at the history of the company, we've been involved in a fairly hefty capital development program over the last 4 or 5 years, as I said, and we haven't really spent very much on exploration out in the field. But what we have done is that we've used our time quite wisely, we think, in terms of targeting opportunities around our existing infrastructure. And we believe that we've identified a pipeline of opportunities that if we put an adequate budget to work, we should be able to add something like 2.5 million ounces to the reserve inventory by fiscal 24. Now we're putting that to the test as we speak. We're drilling opportunities around all 3 of our mine sites in close proximity to existing infrastructure. At Yaouré, we've got about 6 rigs running on the CMA underground exploration project that we've got. And similarly at Edikan, we've got 4 rigs running on a project which is called Quartermaine, or it's the Yaouré license area, which is about 10 to 15 kilometers away from the mill. Now, we have allocated a budget of $110 million over the next 3 years, so fiscal 22 through to fiscal 24. So we're making sure that this program is well funded, and we believe that by doing this, we're going to give ourselves every opportunity to generate that additional 2.4 million ounces in reserves, as I mentioned earlier. Now, we will be coming out in October, about mid-October, with exploration updates on both the CMA underground at Yaouré and the Yaouré license area around Edikan. So I'd suggest that you keep an eye out for those, because they have a fairly interesting story to tell. Now, if we're successful in making those discoveries, this is what our production profile looks like going forward. The maroon bars, as they stand there, is our production profile based on existing ore reserves as published at the end of June. The gold bars, are the additional reserves that we believe we can add through that exploration program that I've just outlined. And as you can see, if we're successful in that, we'll be running around the 500,000 ounce mark out towards the end of the decade without doing anything particularly clever or anything off the license areas, doing any acquisitions or whatever. Now, if we were to do any acquisitions, then quite clearly that line would lift up substantially above that. But for the time being, we're very focused on organic growth, and we believe that we have a terrific opportunity to deliver some sensational results for our shareholders. Now, in terms of our ESG commitment, this is something that Perseus has been very focused on ever since we started our life out in Africa. It's very, very important to us in Africa in particular. If you don't have a social license to operate, you don't have anything at all. And we make a very strong contribution to our local communities. We look after our staff very well. We look after the environment very well. And we run our business very well, observing all of the standards that are required from a governance perspective. And in fact, what we're doing is we're getting our systems and processes into shape such that we're compliant with all of the major standards that apply around the world, the World Gold Council standards, SASB, Sustainability Accounting Reporting, and also the Sustainable Development Goals of the United Nations. All of these things are particularly interesting and important. The Task Force on Climate-Related Financial Disclosures also, we're in the first year of that. Now, we're coming out with an updated sustainability report around the middle of October. We did produce our first sustainability report last year, but there's an updated version coming out very shortly. And I think if you were to take a look at that and read that, you'll be very comfortable that Perseus is a company that is a responsible miner and is doing a very good job in this space, and looking to look after all of those people that we're responsible for. Now, it is a function. It's as good. The performance is as good as. We certainly need a social license to operate, but it's certainly true to say that the company's success is only as good as the people that work there. We actually have a first-class team of executives and workers, and I'm very happy to say that they're led by a very experienced team of directors as well. And it's no accident that all of the males on that particular board notice not too many of them got any hair. And I guess we've been around the block for a few times and seen a lot, but I think that's important in terms of being able to keep the company on track, doing the things that we have promised to our shareholders. So in conclusion, I think that you could reasonably say that Perseus does represent a very compelling investment opportunity. We are in Africa. All of our assets are in Africa, and that's not to everybody's liking, but I have to point out that we do have diversity. We've got multiple jurisdictions, multiple operations, so there's a very comfortable spread of risk around what we're doing. And we're being very successful in our endeavours, and having moved from a junior explorer to a 500,000 ounce gold producer over a period of about 10 years. There's been quite a journey along the way. There's been plenty of ups and downs, but I do think we've put ourselves into a very strong position to go forward. We've got a strong balance sheet. As I say, our social license to operate is in very good shape, and the company is managed by people who are responsible and look after shareholders' interests. So with that, I think I'll close my commentary, and perhaps we could open the floor to questions if there are some.
Thanks very much for that, Jeff. We do have a few questions for you. Could you please run through what Perseus policy is for dividends?
Yeah, the policy, as I said, is that we've set a goal of generating a yield of 1% per annum. Now, what we'll do is we'll pay dividends on a 6-monthly basis as we release our results, and we will deliver that 1% yield to shareholders on a consistent basis. We have allowed ourselves to the opportunity to increase above that 1% should we have excess amounts of cash over and above our needs to manage our balance sheet and to continue the growth of the company, and that those additional dividends will come through either special dividends or share buyback. But for the time being, we've set ourselves a goal of 1% yield per annum.
Thanks for confirming that for us. And you did mention in the presentation that you've earmarked exploration expenditure of $110 million from financial year 2022 to 2024, noting that that's across the 3 assets in West Africa. Would you look to do M&A outside of that region, outside of the West African region, or what are your views on that?
Yeah, look, I mean, we're certainly not bound to West Africa necessarily. I mean, we are willing to look outside that area. For us, it's a question of getting the risk-return ratio correct. For us to go to a new jurisdiction, whether it's in Northern Africa or Eastern Africa, we would be starting at the bottom of the pile and learning our way through there. So we would go there, provided the opportunity gave us, was good enough to be able to generate the sorts of returns that we're seeking, and also to, I guess, allow us to learn on the job. But to answer your question very directly, yes, from an M&A perspective, if the opportunity is good enough, we would go elsewhere on the African continent, and we conduct a program of looking for those opportunities on a regular basis. But I can assure you that that executing M&A is a lot more challenging than talking about it.
Yep. Well, as you mentioned, though, you do have a very experienced board, so I'm sure whatever you pursue, you'll be able to handle it. Someone has asked if any of the recent political issues in Guinea have any effect on Perseus.
No, none whatsoever, actually. I mean, certainly Guinea is on the border of Côte d'Ivoire, but Côte d'Ivoire and Ghana are leading, the charge by ECOWAS to try and settle things down in Guinea. No, it's had absolutely no impact whatsoever. Côte d'Ivoire, we've had both Côte d'Ivoire and Ghana have had elections in the last 12 months, democratic elections, and have settled down very nicely since. And the sort of political upheaval that you see in Guinea and also in Mali, where there's been a couple of coups in the last year, we don't see any sign of either of those things in either of the countries where we operate.
Great. And one last question for you today, Jeff. We've got a question around hedging gold. So do you hedge gold? And if so, what part of your production is hedged?
Yeah, no, we do hedge gold. The policy for hedging allows us to hedge up to 30% of our gold on a 3-year horizon. Now, we're not hedged to that degree right now. We're hedged to about 20% of our projected production over the next 3 years. And it's actually hedged at a weighted average price of US about $1,600 an ounce, which is a fairly healthy price level to hold at. So look, we're unapologetic about that. I mean, a lot of investors say, oh, they want 100% exposure to the gold price. But you see, we're professional managers and we're managing this business for all stakeholders over an extended period of time. And what we do know, we've learned over the last 10 years, is that the gold price goes up and it goes down. So we think that by having about 20% of our total forward production or our production over a 3-year horizon hedged, gives us a level of comfort that we can continue to operate the business and generate the benefits for our stakeholders under all trading conditions. And so that's where we are. We do it in a very methodical kind of a way and seek to maximise the opportunities as we can. But I think that history has shown that our approach to hedging has been extremely beneficial. It's kept us in business when a lot of other people were rather concerned back in 2013, 2014. And it's something that we'll continue to do into the future.
Thanks, Jeff. And thanks for joining us today.
Thank you very much for having me.
Thank you.